Let's try and get more answers now and bring in top chip analyst Stacy Rasgon of Bernstein. It's great to have you on a very important day to speak with you. What do you make of this story? What is the worst drop for Nvidia, at least in years?
Yeah, you bet. So I spent a lot of time this weekend, most of my weekend looking at this. So we knew it was going to be a circus today. It was pretty clear just given everything, all the takes that were there in the Twitterverse. I had sort of three conclusions. It's my own conclusions from this as I'll call it like a semi-informed layperson around this. But number one, I think the big issue was that the headline, the initial takes that came on this was, oh my God, China's duplicated OpenAI for $5 million, which is categorically not true. We can talk about what they did, but they did not train this reasoning model for $5 million. That did not happen. We can talk about why. But number two, how did they get the efficiencies that they did? These are very, very good models. Like, I don't want to discount that. But the types of things that they did, they're not miracles. They're a mixture of experts, and they did some very interesting with something called multi-headed attention, and they use lower precision calculation. These are all things that are known, and all of the labs are all working on, if not deploying already. So there was nothing here that was like unknown to anybody else, like in the AI industry. Like, these are not miracles. Finally, like number three, I personally think, we'll talk about this, I think that this is clearly a panic today. I think it's overblown. The school of thought here is that, like, oh my God, these are so much more efficient. Like, we don't need as much investment. So number one, we actually don't know what they're spending to train the reasoning model that's causing the angst. My suspicion is quite a bit more than what they did to train the base model. And number two, you got to remember, like, I'm a semi guy. Like, I actually view cost reduction as a good thing. We want adoption. Like in semiconductors, again, I'm probably biased, but like cost fell by a factor of 2 every 2 years for 50 years. It was not a bad thing for semiconductor. It was a fantastic thing for semiconductor, man. Unless you think that we were already close to saturation in terms of the amount of compute that was going to be required for AI, we need these kinds of innovations and efficiencies, because otherwise, like, you're not going to be able to get to where they're going anyways. And so I think this was already happening. I think it needed to happen. And I can make, I think, a very clear argument that the more efficient things get, the more demand we will have, not less. So I actually think over the long term, this is a good thing, not a bad thing. But clearly the market disagrees today. So that is what it is.
I mean, Nvidia hasn't been afforded the multiple it has, nor the stock price, for that matter, on the idea of a commodity. Has it? Hasn't it been rewarded the way it has on the idea of the best, of a moat, on some level of exclusivity, at least now?
Well, the issue here is not that. Where is the commoditization and it's not the chips. It's the models, right? So again, if your business model going forward is we're developing AI models that we're going to sell to the general public, maybe you worry. Like, I don't know. It doesn't mean that, like, that the folks that are doing this still don't need to buy a lot of chips. I think they're going to still go to buy a lot of chips. And by the way, what did we see last week as all this was happening? We saw Facebook, or Meta, I guess, massively take up their CapEx guide. We saw all the Stargate stuff. We even had China actually announced a 1 trillion RMB, so like roughly 140 billion US, a program for AI investment in China. This was all last week, right as all the Deepseek stuff was happening. Deepseek's not new either, by the way. The V3 model, the base model, was actually released on December 26th. Like, none of this is new. None of this is surprising to any of the large U.S. guys that are spending all this money. They're spending it anyways.
Some Wall Street analysts believe that Monday's Deepseek-driven sell-off may present a chance to purchase battered AI equities. Nvidia and numerous other AI-related companies fell, causing the tech-heavy Nasdaq composite to drop more than 3% after an app from the Chinese AI startup Deepseek overtook one from OpenAI as the most downloaded free U.S. app. Concerns regarding the demand for the requirement of pricey AI technology are the root cause of the decrease, as Deepseek's model performs comparably to its American counterparts while consuming less processing power. A few Wall Street observers sensed a chance to profit from the decline. Along with Microsoft, Alphabet, Palantir, and other major players in the American AI ecosystem, Wedbush analysts referred to it as a golden buying opportunity to acquire Nvidia. Wednesday, major U.S. companies are unlikely to use a Chinese startup like Deepseek to launch their AI infrastructure, according to the analysts, who called the company's accomplishments impressive. They added that while launching a competitive LLM model for consumer use cases is one thing, launching broader AI infrastructure is quite another, and nothing about Deepseek leads us to believe otherwise. Analysts at Bernstein referred to the market's response as exaggerated and stated that they still have a positive opinion of the AI stocks they cover, especially Nvidia and Broadcom. Both companies, along with Qualcomm and Applied Materials, were nonetheless rated as outperforming by Bernstein. Recent AI spending initiatives, including as President Trump's announcement of a $500 billion AI infrastructure project named Stargate, indicate the ongoing need for cutting-edge U.S. chips, according to Citi analysts who kept their buy recommendation for Nvidia. To the advantage of more established companies, analysts at Raymond James added that Deepseek's developments might also force American hyperscalers like Microsoft, Google, and Amazon to take more decisive action. They reaffirmed that Nvidia was a strong buy. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
What do you make of this news about Deepseek and the questions it raises about Nvidia and the prospects for Nvidia?
Sure. Well, thank you for having me today. Certainly always an exciting, different day when you wake up. You never know what the facts might be or what the reaction will be. I was told very early in my career, my job is trying to put the puzzle pieces together, and you think you do your job and you have a great thesis or story and earnings, and then you come in and there's a new piece that you haven't put together, or they were all mixed around. And so there's never an end to our job. We're focused on fundamentals, long-term horizons. And so I've been a shareholder since 2016 in Nvidia. Apple is looking back 2004. And so these are sort of the timelines we try to invest across our portfolios for clients. And so, we had a period where the shares were performing exceptionally well. There's periods where they're going to underperform relative to expectations. So particularly on this news today, I think the question has been what the growth trajectory of the company will be in the future. That has been a question on every call in the last several quarters since there was a real breakout in early 23. If you recall that $7 billion quarter to 11, something that people had never really seen before. And no one thought they can grow in 2024. If you thought about all the calls during 23, there were real questions. Could you have any growth? And their company, had the insights, and they said, we do believe we'll grow in 24. We're looking at another perhaps 50% plus revenue growth, year ahead after doing over 100%.
Right.
And the question again is, well, what happens next year? It's always the question of and so I think there's always a period of question and concern. They ramp their products every year. That sort of catalyst of new upgrade cycle, which we appreciate, we like. That's something similar with Apple when they have new phones. Despite maybe consumers being a little bit less excited each year, there's enough of an installed base that people will upgrade. And so I think there's a lot of similarities here with Nvidia.
Right.
But when shares are worth more than any other company in the world, heavy is the head that wears the crown. And so I think there's been a lot of skepticism before. Yes.
So very quickly here, as the big tech companies get ready to report earnings, what will you be listening for here to try to assess the impact on Nvidia from Deepseek?
I think the questions on CapEx for their largest customers, they sell to the largest cloud hyperscalers. I think we are still very early in cloud adoption very broadly. When you think about the amount of budgets companies spend on the cloud, you think about the CapEx budgets for Meta, for Microsoft. Just last week, several days ago, less than a week, we had the announcement of Stargate, which was a new entrant into this sort of cloud hyperscaler world. And you had other companies come out and say they're going to spend more. I think if there's any question on the future spend, they do guide, basically only on an annual basis. And so we're not going to get any guidance on 26 or 27 CapEx. Obviously, all stocks are discounting value of future. But as your previous guest mentioned, 5 years from now, there is no answer for that. No one will have that answer. I do believe that there's a great phrase Jensen has said for years, which gets lots of laughs. The more you buy, the more you save.
Yes.
And efficiency gains might actually put back into more adoption. And so I think we're very early still.
NVIDIA's future, in some respect, is leveraged to the development, the production, and the success of Blackwell. If the company is telling you I'm going to read a comment from a spokesperson at NVIDIA, which I think speaks to this, and we can discuss on the other side, where they say Deepseek's work shows how new models can be created, leveraging widely available models and compute that is fully export control compliant. Now, you could read that and say, well, is the company admitting that you don't need the latest, greatest, most expensive chip to do what Deepseek appears to have done?
No, I don't think that's what they're. So they're making a statement on China here because that came out of China. But look, you're going to have, like, if you're getting a massive proliferation of models frankly, of all shapes and colors and sizes, you're getting adoption. This is over time what we want. Right. This is not a bad thing. You're going to hear this a lot today, probably already. But there's a concept known as Jervin's paradox. The idea is as efficiencies and costs come down, like demand more than offsets. I keep going back. I went to the Hot Chips conference a couple of years ago, and Bill Daly, who's NVIDIA's chief scientist, was giving the keynote. He was actually talking about performance improvements in GPUs, and he talked about, like, over the prior 10 years. NVIDIA had improved GPU performance by like 1,000x. And it was a bunch of things: process tech and architectures and sparsity and lower numerical precision, all kinds of things. But what he said in that keynote was, like, over the next 10 years, we want to improve the GPU performance by another 1,000,000x. Like, again, unless you think that we are at the limit of what the compute that we need, I think this is a good thing. And if you look historically, we've never, ever had enough compute. Like, I've got the data going back even before AI was, like, taking off, just looking at, like, sort of installed compute in the data centers, like in MIPS and millions of instructions per second. I have this data going back like 30 years. It was growing at 50% a year forever. It never stops. So I'm personally not of the belief that you can have enough compute. I think if we're getting efficiency gains, which I think we need if we're going to meet the compute demands that AI and accelerated compute are placing on us, I think that we're going to get absorbed. I think we need this.
According to Goodrich, the device is arguably the best inference chip available, even though the limitations restrict its usage for AI training. How long will Washington allow the best inference chip in the world to be sold to China? He added. Even though Nvidia's stock price fell 17% on Monday due to the Chinese startup's rise, the chip company praised Deepseek's R1 model as an outstanding AI breakthrough. An Nvidia representative told CNBC on Monday that Deepseek is a great AI development and an excellent illustration of test time scaling. The work of Deepseek demonstrates how that method may be used to generate new models by utilizing publicly available models and completely export control-compliant computing. The remarks follow Deepseek's publication of R1, an open-source reasoning model, last week. According to reports, it fared better than the top models from American firms like OpenAI. Compared to Silicon Valley corporations that are spending billions on building their artificial intelligence models, R1's self-reported training cost was less than $6 million. According to NVIDIA's statement, the American chip manufacturer's graphics processing units, or GPUs, will have more work now that DeepSeek has made a breakthrough. High-performance networking and a sizable number of NVIDIA GPUs are necessary for inference, the spokesman continued. Pre-training, post-training, and new test time scaling are the three scaling laws that we now have. Additionally, NVIDIA claimed that DeepSeek's GPUs were completely export-compatible. This refutes Alexander Wang, the CEO of Scale AI, who stated on CNBC last week that he thought DeepSeek was using NVIDIA GPU models, which are prohibited in mainland China. According to DeepSeek, it made use of customized NVIDIA GPUs meant for the Chinese market. Analysts are increasingly questioning if corporations like Microsoft, Google, and Meta's multi-billion-dollar capital expenditures for NVIDIA-based AI infrastructure are squandered when the same outcomes can be obtained at a lower cost. As part of its AI strategy, Microsoft announced earlier this month that it will spend $80 billion on AI infrastructure in 2025 alone, while Mark Zuckerberg, the CEO of Meta, announced last week that the social media corporation would invest between $60 and $65 billion in capital expenditures in 2025. We would anticipate a short-term cost gain for advertising, travel, and other consumer app companies that use cloud AI services if model training costs turn out to be much lower. Justin Post, an analyst at BofA Securities, wrote in a note on Monday that long-term hyperscaler AI-related revenues and expenses would probably be lower. In recent months, Microsoft CEO Satya Nadella, OpenAI CEO Sam Altman, and NVIDIA CEO Jensen Huang have all highlighted a new theme, which is reflected in NVIDIA's comment. The scaling rule, an idea in AI development put forth by OpenAI researchers in 2020, was largely responsible for the AI boom and the need for NVIDIA GPUs. The idea was that by significantly increasing the quantity of data and computation required to create a new model, more and more chips would be needed to create better AI systems. Huang and Altman have been studying a novel twist on the scaling rule since November. Huang refers to this as test time scaling. According to this theory, a fully trained AI model will produce better results than it would have if it ran for a shorter period of time, if it used more computer power to generate text or images or make predictions. Some of OpenAI's models, like O1 and DeepSeek's groundbreaking R1 model, Both use variations of the test time scaling law. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.